Earnings season is well underway in the US, with many companies reporting great results. However, the S&P has just dropped overnight, just over 1%. And some of the biggest news lately is that more banks have collapsed in the US, this time taking out First Republic Bank. In today's video, I want to show you why this is not an issue. I'm giving you my analysis, not just repeating the news headlines to you guys. So make sure you have liked and subscribed to the channel, because this is the only place you see it on the internet where we bring together the real estate cycle, stocks, commodities, and cryptocurrencies. Now, a lot of people do bring the analysis to the game, but they don't incorporate the real estate cycle. The real estate cycle is our savior when it comes to what is going on in the market. We don't always know what's going to happen to the exact minute, but over the longer term, the macro picture, it has done phenomenally well over 200 years of data. That's why we focus on that cycle and why we're not worried about these major headlines that come out in the news. We should know by now that the news is only there to fool us. So what is our alternative to the news? Well, first thing is, of course, the charts and learning how to read the charts. The top of the video description, we have less than 12 hours to go now where we deliver you our crypto and economic report to your email inbox once every 2 weeks. So go and check that out. Link is in the top of the video description. And the other shills here are for our channel sponsors for ByBit and Bitget, giving away $230 free USDT, no trading required. That's the details for now. Let's have a look at what has just happened here and how we could have preempted this if we were following First Republic Bank, or rather than getting feared out of our positions with the recent news headlines, more bank jitters as First Republic probes asset sales, bad bank option source, we can see from the analysis on the chart using the TIA Gann swing indicator and our Gann 50% level. You can get all of these on TradingView just using the fib retracement here. So this is the First Republic Bank. It has collapsed again. This time we're down 43% on the week. But this collapse really began from the peak here in mid-November of 2021. Lower highs, lower highs, lower highs, lower highs on the Gann swing indicator using the macro chart here, the weekly chart with 2 bar swings, all lower highs, telling you there is something very, very wrong with this bank and that insiders, smart money, are not buying this stock for the long haul. Every time it came back up to the highs, it got rejected at lower and lower prices. Very, very easy to trade on a swing chart using the macro chart here. So making a ton of cash from that point. Now, the other big note is that it got rejected dead on the 50% level, going from the pandemic low, here is that low, to the all-time high, right through the middle, 50%. And this did not even close above it on the weekly chart. Then it collapsed from February. This was the March collapse, a further collapse when all the rest of the banks were in trouble. And now we're finally seeing that final 43% drop. Of course, this looks like nothing on the chart because it's on a linear chart now. You can just see that it went from the price here down to here at around $8. So this is telling us of how weak this bank was before the collapse, which is how we read through the news headlines and know the news before it happens based purely on the chart if we were following this chart. So throwing it back on log, you can just see the severity of this drop, which is why it is making headlines. And I'm not doing anything crazy here. Any beginner can do this. It doesn't take a genius to do this. What it does take is knowing how to read the charts and knowing how to analyze what is happening with the price and what people are actually doing with their money, putting their money where their mouth is, not where those headlines are. The next headlines coming up this week are the GDP. So we're waiting till Thursday night my time, Thursday morning US time, to see what is going to be announced about the GDP. However, we are starting to see some good signs from the earnings in the US. Not that this actually means anything to the SP 500 through a 6 and 12 month period. We're talking about investing and buying here. We're not talking about trying to analyze the words of a collapse or a recession. We're trying to make money from the market and identify when other buyers and sellers, or what other buyers and sellers are doing in the market. What is the smart money doing? Are they buying or are they selling? And unfortunately, the majority of people are still hung up figuring out whether we're in a bull or a bear market. They believe that this isn't a bull market and that we're still in a bear market. And of course, everyone is free to make their own decisions. This is what they want to do with their money in the market. However, if they're still thinking that this is a bear, they've missed the last 6 months of higher lows on the S&P. They're expecting this market to roll over and collapse and break past these levels. All we're trying to say here is that we are in a transitional period, and eventually we're going to break through these resistance levels at 4,200 points without going below the cycle low. There are going to be some pullbacks, just like we saw overnight by 1.1%, and to those next support levels, probably by another 1.2% down here to 4,060, maybe even to the 50% level here at around 4,020 points, which would stretch us out to about 2.2%. This is all part of the resetting of the markets, resetting of the market sentiment, the fear and greed, and this is happening across the stock market right now and across Bitcoin. But before we get to that point, I just want to have a look at some of the earnings that are coming out. So we've got Microsoft and Alphabet. These are beating the expectations. Earnings per share, $2.45 versus the $2.22 expected. Revenue, $52.9 billion versus $51.1 billion, which was the expected, so it's above and above. Not that this is really what the markets are looking forward to. What they've already done is priced in what had happened 6-12 months ago. That's why we had lower prices and now we're starting to rise. The markets are always forward looking. They're not that interested in the returns or the earnings that are happening now, that are being reported on now. They're looking forward to the next 6-12 months of what can be happening for these big companies later on. And all of those signs are pointing up. Now, there's another great resource data point here from my friend here, Seth Golden. You should follow him on Twitter and unfollow almost everyone else you've got there on Twitter. Follow a handful of people and it'll make life so much more easy. That's just what I do. And it does make life a lot easier to grab the right data because there is so much bearishness out there. But going just to the earnings as we are on this right now, this is a really interesting point here that is made. Negative earnings per share. These are the years that had negative earnings per share. 1960, 1970, 75, 82. You can read them all here. Okay? But the S&P was up in 1970. It was up in 1975. It was up in 1982, which was a down year, which we had that minor recession or bear market in 1982 where Ray Dalio nearly went bankrupt. Ray Dalio, okay? Remember that. 83 was an up year. That's a 40-year cycle from now. 85 up, 86 up. So S&P earnings were up while there was negative earnings per share. 1991, 2007. Yes, that was the peak. We had 2008, which was a negative year. That was the bear market. 2015 also saw a small bear market. So that was a negative. 2020, we know what happened there as well. And of course, there are a couple of these other times here. But more often than not, it had positive results for the S&P. So where you can actually buy and make money or sell and make money, okay? So it doesn't matter what the hell the negative EPS is at. The data shows that the S&P is going up. But in the short term, what we're looking for is a reset on the fear and greed index. So this is the fear and greed index for the stock market. It's currently at 57. It recently was previous close 63, a week ago at 68. And then of course, last month we were going through those fearish times when the banks were collapsing. So over this period, we need to reset and come back down more into a fear or a neutral zone, which is below 50. So this is probably going to take another few days to a few weeks. We're looking out for May now to let us know where the markets are going to go from this point. But nonetheless, the macro picture still looking positive because the lows are not getting taken out. And so all these comments about, or people's beliefs, which is everyone's entitled to their own beliefs and how they tend to track the market, are just not true. The market is still up. I don't know how many times we have to look at this and to understand what is actually going on in the market with higher highs. And these ones are now equal at our rejection level, but we're also getting very significant higher lows. This one here is the banking crisis low, of course. And like I just said, we're looking at some sort of move correction back to any of these support levels. And this is still a safe area. This is basically a market resetting. It needs to reset all of the hot air, the steam, the bullishness, come back to a more neutral zone, maybe even slightly fearish before we can start our next leg to the upside. The time where it can be wrong is if we break down from these lows. These are the key levels here, and my bullish macro view would start to come undone should we break these levels here. So I'm always looking at both sides of the market. Until this is broken down, I need to have the bullish bias because market's up. What can you say? There's nothing that is saying that it is bearish right now, unless it breaks, takes at these levels, because this is where the buying is actually happening. This is where the support is actually coming in. You break a support, market heads down. That final level, 3,600 points. So even if we do break that, it just means there's a prolonged period of time underneath these levels, unless it breaks back above or it breaks down from this low. So there's a lot of support being formed underneath these levels now for the S&P, and that is also showing through on the VIX as well. Even though we had another move to the upside, which is meaning that the S&P is going down, we're still a long way from any of these tops, and we have lower tops forming, which is a bullish sign for the SP 500. We've just reached levels under 17, which have not been seen since the bull market in 2021. So this is the first time we've started to head back into this zone under 17 for the VIX. Let's pay particular attention to this because this has been a very key area for the market to determine the macro bull and the macro bear. Lower highs, starting to get back into the bullish zone. Really good signs here. If you have missed any videos, I'll leave a link to this at the end of the video because this is covering everything in the markets. Like I said, from the real estate cycle, cryptos, stocks, and of course the commodities as well. Now I'll be doing a real estate update on the channel coming up very soon in the next few days. So make sure you do subscribe, like the content, and of course check out the links in the top of the video description for our free crypto and economic report dropping in the next 12 hours. As for Bitcoin and cryptocurrencies, well, this time we have got a rejection just underneath the 70 level. So you can see here we were touching 68, 69, getting to those higher 60 prices, and we finally got that rejection. This was the zone we were looking at between 60 and 80 for a rejection in the move to the upside. That's what we saw in the previous first stages of the bull market, 2019 into mid 2019, so late 2018 into mid 2019. Got the rejections there. There's your 70, there's your 80. We did have a very solid blow off top there. We didn't see it this time, but nonetheless, between the 60 and 80 has been a good area for those first stage moves out of lows. And we've got that rejection yet again. So it looks like we're pulling back to reset the market somewhere between your 40 and 60. Maybe if we're lucky, and I say lucky, we get that extra fear in the market, we hit into the 30s. That's going to help reset the market quicker. Maybe we trend along those market sentiment feelings at around that 30 to 40 for a bit longer. That could even just be a price range for Bitcoin between 25, 26, maybe 27,000. Because overnight, in the last 24 hours, Bitcoin has gone up 2.8%. I don't think we're out of the woodworks here. I don't think we are about to go up into new highs because we haven't broken past this level at 28.5 and the 50% level, which is now $29,007. So Bitcoin still needs to get back above those levels for the short-term strength to come into the market so it can attempt to break 30 and 31K again. For now, this all looks like it's a bit of a rally into a diagonal resistance. You can see that this was the tops through January and February, another little peak here in March, and then it became support. So it looks like we're coming back up to at least test this zone, which, like we just saw, lines up with 28.5 and 29,000. I think we still have a bit more time here. We have spent 5 months going up. Unless this is a last all Hail Mary attempt to take the tops out, I don't expect this to be that price to the upside, and it's just a bit of a pity bounce before we continue to the downside. Like I pointed out before on Twitter, prices to watch 26,500, 25,300, and this 23.9 around 24K level. So plenty of support building under BTC while we reset the fear and greed index, while all of those late bears that flipped bullish get taken out and they go back to the bearish side, claiming that the bear market is still on. And from that point, we're able to reset and then mount another attack to the upside. Now for you guys, the loyal viewers who have stuck around to the end, I want to show you this chart here, and I'll go through it in more detail in another video coming up. I've got so much data that I've gone through on charts, and of course the statistics as well, that I just can't fit it all into one video, nor would you want to sit here and listen to me for another 20 minutes. Nonetheless, this is the Dow Jones, and like we have covered before, we are really starting to see the market break out of log down trends, come back and retest them before we start to bounce higher. It's happened many, many times in history. This is only just the beginning of it, going back to the late 1990s, so 1999 here, as we had the bear market. We also had another dip here, the log downtrend, a breakout to the upside, breakout to the upside, market crashed again. You can see the breakout and retest, a breakout, retest, and as an update, we have done that again through the month of March. This is really, really interesting stuff as we go back through history and look at how this bullish action begins. And like you can see from a lot of the comments, people are still very, very bearish, claiming that this market is going to break down and break the macro lows. I'm not concerned with any sort of few percent moves to the downside as we test some levels, because of course we're still weighing up between the bears and the bulls. But many people still believe we're going to take out these lows that were set in September and October of 2022 on the stock markets. It doesn't seem to be the case. Time will tell. Looks like history is rhyming yet again as we break out of these log downtrends. I'll have more for you in future videos. Like and subscribe. Check out the links top of this video description. And limited time, this is till the 16th of May, $230, no trading required, using the links down below, ByBit and Bitget. And for the Aussies, $20 of free Bitcoin if you use that link down there. Thanks again, guys. I'll see you at the next video. Have a great day. Until then, peace out.